yourself a merry little Christmas. Let your heart be light. From now on, our troubles will be out of sight.
Hey Richard, how you doing? How's the audio coming in for you? Okay. Morning, Mapo, BB, Free Tube. Merry Christmas. How you all doing? Hope everyone had a great weekend. Weekend's winding down. Christmas definitely upon us. That's for sure. Great. Thanks, Richard. Appreciate it.
Faithful friends who are dear to us, gather near to us once more.
Silver Patriot USA, how you doing? Pink Mangoes, how you doing? Glad you could be here with us today. I like that name. James Richter, how you doing? Giuseppe Capricosa, how you doing? Glad you all could make it. Yes, indeed. Merry Christmas to all.
And have yourself a merry little Christmas. Have yourself a merry
Gilpit
little
581, how you
Christmas.
doing?
Have yourself a merry little Christmas now.
So hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I'm your host. Maybe this little red guy next to me is part-time host as well, but let me send him on his way. I know he's going to be busy in the next few days. So again, welcome to Silver Bullion Television. Hope everybody's doing well. Christmas week is upon us, and Sunday night, wherever you might be, Monday morning for us in Asia, and I appreciate you all being here. So James Richter again, Merry Christmas to all. Mike Hymns, have a silver Christmas. I'm for that. Silver Christmas is nice. Anthony Pretlow, confiscation scares me. Well, there's things we can do to protect ourselves from that. Um, so let's see. James Richter, funny, my phone notifies me you're live, but I don't see it on the desktop. YouTube. Pablo Pina, hello, Patrick. Hello, Santa. Great. How you guys? How's everybody doing? Hope everybody's doing fine. Once again, if you are new to this channel, definitely please do subscribe and click on the bell to be notified on updates and give us a thumbs up. If you like what we do, we really do appreciate your support. And don't forget, you can always find us on social media. Silverbullion.com.sg is our website. SG, we're over in Singapore. Silverbullion SG, again, SG because we're over in Singapore. At Silverbullion PL, meaning private limited. You can find the audio versions on bit.ly, bit.ly at SBTV iTunes and SBTV Spotify. And we hope you join our Crisis Tracker group. If you have the Telegram app, or if you don't, go ahead and install it. And you can find us at Crisis Tracker. It's a group where we go ahead and we post news as it pertains to, let's say, precious metals or economy or things like that. So we do hope we get to see more of you in that group. Taking a quick look at the comments. Sergey, oh, what a name. Yeroshenko, how you doing from California? Hope everything is well there. Pudenda Johnson, Merry Christmas. Merry Christmas to you also. Merry Christmas to each of you and all of your families as well. Let's see. Giuseppe Capricosa, just heard a top interview, Gold into 2020 with Andrew Maguire. I haven't had a chance to take a peek at that. Um, I will certainly do that. Rogue Silver, how you doing? What's up, brother man? Hope everything's fine where you're at. But again, definitely Merry Christmas to all, and we do hope everyone out there is doing fine. Rico out in Arizona, been sacking only a year or so, and been tuning in for a few months now. Well, thanks for tuning in, Rico. Rico, we appreciate your support. That's from Rico Stacks. Pro Brown, Merry Christmas from Berlin. Merry Christmas to Berlin as well. Thank you for being here, Tom Seller. Merry Christmas again. Merry Christmas to each and every one of you. We're glad that you're here, and we appreciate your support. Let me close up a few windows just to make sure I don't stall too much on you folks. Um, okay, so let's get the ball rolling, and we'll head on over to our website, silverbullion.com.sg, and let's go ahead and take a look at silver and gold prices. We are closed December 25th, Christmas Day, and December 26th, Boxing Day. So we're closed for those 2 days. So just to give everyone a heads up on that. In US dollars, silver, $17.24. So it's doing okay in Asia this morning. Gold, 1480. Gold is doing well also. Nickel, 14,328. Still a lot of headwind for nickel for some reason right now, trying to push back up to that 15, 16, $17,000 level. Cobalt, 32,000 per ton. I'll need to check on that price and see where cobalt is at. But those are the current prices this morning. And don't forget, we do have that free investor kit for you all. If you want to download it, you can simply go to our website, silverbullion.com.sg. Then you'll go to storage. Then you will go to download investor kit, just like this. And there you go. You can download it as a PDF or just scroll through it if you want. There's a few interesting things in here. Why buy gold and silver? Uh, why silver bullion, in fact, and why you should be storing wealth outside of the banking system. I think we're all pretty versed in the reasons why we should be storing outside the banking system. But again, the buying process, how it works, applying for a star storage account. I think that's something you folks might want to consider, because whether or not you use it, it's free. There's no charge. There's no maintenance fee on keeping that account open. And also, I think you'll be able to subscribe for newsletters as well from us at Silver Bullion. So it may be maybe a good idea for you folks to go ahead and do that. And just want to take a quick look at what seems to be our favorite website to go to nowadays, the repos and reverse repos. It's kind of calmed down, I guess, with the Fed saying how much they were going to inject last week. I think the repo market kind of sort of felt at ease a bit. So we see the numbers a bit lower. 16 billion in treasuries, 9 billion mortgage backed, and we've been watching this mortgage backed because the numbers have been actually spiking. Last week we saw a high of 20 billion in mortgage backed, so we're keeping an eye on that. 15 billion, 10 billion. This was on Thursday, and then we go a little bit further back. 14 billion mortgage backed, 16 billion in treasuries. The interesting one was on Monday. So let me see if I can get to Monday here. I'll scroll down a bit, and here we go. Monday repo, reverse repo actually. Oh, maybe I passed it. Hang on. 24 billion mortgage back. 24 billion. This is the highest I've seen it yet. 24 billion. So again, we're always hearing about the treasuries in the repo market, but we're just not hearing about the mortgage backed. So I think something may be going on again, and we all know what happened last time that repo, I mean the mortgage backed got in trouble. So let's take a look at more of your comments. Again, glad you all could be here. Let's see. Rumpelstiltskin, 1 trillion repo coming in January. Could be, my friend. Nothing to worry about, kiddies. Move along, move along. Yeah, there you go. Exactly. QWERTY281, where do you store it? Um, if that question is for me, we store in Singapore, and a big reason for that is because of the jurisdiction for Singapore, and with our company, because we're entirely Singapore owned. We're not really under any type of U.S. jurisdiction, and because we own the vault, your things that you're storing with us is not being stored in a third party vault. Meaning, a lot of times you store with a bullion company, and then that bullion company stores with a vault. Now, whatever that vault decides, whatever insurance policies it changes, whatever it may be, you're subject to that now. But with us, you aren't subject to any of that, because when you deal with us, you are essentially dealing with the vault. So that's one thing to always keep in mind. Polybus, Polybius, excuse me. The big repo injection comes in March. I'm thinking it's coming all year long, but if you're saying the big one, then let's see, could be in March. I'm not doubting anything at this point. Let's see. Any more mortgage back? Yeah, mortgage back repo. Let's see. Rico says repo always happens in the middle of the night. Yeah, it tends to be an overnight. It's an overnight market where banks are supposed to be lending to each other, but what's happening is, for some reason, the banks. I'll just say they're not trusting each other right now, and the reason I say that is because when back in September, what happened was we saw a spike almost up to 10%, meaning if the banks were going to loan to each other or to a hedge fund or whatever it was, they wanted a heck of a lot more interest on that money. Kind of like saying, if your friend wants to borrow money from you, and you know he's in a bit of trouble, you might want a little bit more in return. But for you and I, we would just loan it to our friends, right? We care about our friends. But for the banks, no, they want their money back. They want that interest. So, apparently, something was up where the Fed had to step in, and still is in, which kind of tells me if the Fed is still in the game, the banks simply don't want to lend to each other yet. So something more severe is definitely going on. And one of those banks, unfortunately, something close to home that I need to share with you guys is, of course, our good friends at JP Morgan. Busted one more time. JP Morgan metals traders under Singapore scrutiny. Two more depart. All right, so let's take a quick look at this. Regulatory scrutiny of precious metals trading at JP Morgan Chase and Company, one of the world's largest gold brokerages, has expanded to Singapore and ensnared two more bank employees, according to people familiar with the situation. The Monetary Authority of Singapore, which we call MAS here, is looking into the bank's precious metals trading unit. Three sources confirmed the probe in the U.S. has resulted in criminal charges against six current and former employees of the bank. Regulators in the UK are also interested in the matter. This all according to Reuters. JP Morgan's global precious metals trading staff has shrunk to around half a dozen people, industry sources say. Tani Ka, the bank's head precious metals trader in Singapore, has been put on leave, two of the people said. This guy, according to this article, he's the bank's head of precious metals trading. So he's been put on leave, and the regulatory attention has also forced out Donald Turnbull, who until recently led JP Morgan's global precious metals trading operation out of New York, one person told Reuters. So from New York to Singapore, these guys are all over the place. Efforts to reach Turnbull were unsuccessful. Of course, he's not going to talk. Ka, a longtime JP Morgan employee who recently won a trading award from the Shanghai Gold Exchange, did not respond to requests for comment. The exact nature of MAS's interest is unclear. It has not publicly accused the bank of wrongdoing. A spokeswoman said that as a matter of policy, the Singapore authority does not comment on our dealings with specific financial institutions. Meanwhile, JP Morgan has said in U.S. regulatory filings that its metals trading practices are the subject of probes from various authorities, and that is responding to and cooperating with these investigations. The ongoing probe by U.S. officials, which includes the Department of Justice and Commodities Futures Trading Commission, has already resulted in charges against six people from last year to this year, all related or allegedly relating to spoofing activities for, look at this, 9 years. 9 years they've been doing this. 9 years. And I think I've mentioned to you before that I do know a banker, and when I talk to him about spoofing, or a trader anyway, he tells me spoofing is a strategy. So the way they see it, apparently, it's nothing wrong with spoofing. It's a strategy. Anyway, spoofing involves placing bids to buy or offers, sell contracts with the intent to cancel them before execution, allowing traders to influence. The U.S. charges have alleged that illegal trading practices took place across J.P. Morgan's global precious metals trading desk in New York, London, and Singapore. So there we go again. J.P. Morgan. What else is new, right? What else is new? What a way to start off a Christmas Christmas week on J.P. Morgan. Same old Grinch. Same old Grinch they are. Let's see. Min Chin Sao. Hey, haven't seen you in a long time, buddy. I think the biggest scam is that for future contracts that you can't deliver, you can settle with cash. Yeah, that's the thing. They a lot of times, if not almost always, they don't care to take delivery. It's just cash settlement. So yeah, it's terrible, terrible. Full name, yes, even involves the Vatican. Yeah, I've heard Vatican has been, kind of doing some un-Vaticanish things, so to speak. Let's see. Let me go down a bit. Rumpelstiltskin, Russia is off the worldwide net today. Wargaming in case of large scale conflict in the Middle East. Disconnect from the U.S. internet. U.S. troops being deployed against Iran at the moment. Seriously, I haven't heard anything about that. We'll have to take a look in it. It's Christmas, not April Fools, right? So this is a real story. We'll have to take a look in that and see if it's true. Let's see. Full name. They need to have those fat fingers removed. They would think twice about doing it again. Yeah. Pawns. Yes, just pawns. Rumpelstiltskin, zero heads. Okay. Um, I'll see if I can take a look at that somewhere along the line. Okay. So anyway, that's J.P. Morgan, and we've been seeing quite a bit of movement in the stock market, as we've been saying. It seems like almost every week stock market's hitting a new high. So you know, we went and found this article where sentiment is too darn high, says a Wall Street trader. So this, a Wall Street equity chief crying foul on the stock market's melt up, lays out the evidence that a plunge is on the horizon. So let's see what they have to say. Recession frenzy that consumed investors this summer has given way to talk of a melt up in the stock market. And yeah, I'd have to agree with that because, as mentioned, nobody fears the stock market right now. And everybody thinks it's just going to keep going up and up and up and up. And, like I said, every week we're taking in or seeing all time highs. It seems no one is fearing it. Well, I shouldn't say no one. We do see a lot of people with big money. They are starting to take chips off the table. But Chris Harvey, the head of the equity strategy at Wells Fargo, sees various reasons why investors could instead be greeted by a 10% correction in the first half of the year. 10% is, I wouldn't even call that a correction considering how much it's been inflated. It's 10%. No, I'm guessing it will be more than that to have a true correction. It was not that long ago that Wall Street was consumed by recession talk. The atmosphere prevailed for good reason. A reliable recession indicator in the form of the yield curve flashed for the first time since 2007, and trade tension reached a boiling point. Yeah, there's a lot of talk about the recession back then, a lot of fears in the market back then. Uh, Chris Harvey goes on to say that the period in the summer seemed like a great time to buy stocks, and it actually was, considering the market's ascent since then. Okay, it's true there. But several months into the rally, Harvey says the opportunity has changed from a chance to buy to a chance to sell because sentiment is just too darn high. His count of headlines mentioning recession based on Bloomberg data is down nearly 70% since August. Also, the CBOE volatility index has fallen 40%. Let's see. The last time sentiment felt this positive was fourth quarter 2017 on the heels of tax reform. Stocks initially rallied in first quarter 2018 before running headfirst into a 10% correction. This scenario could repeat itself with a 10% correction in the first half of 2020. So that's his take on why it may go down. Let's see this. Despite the risk, Harvey expects stocks to round out next year on a higher note. His year-end target for the S&P 500 is 3388, implying a roughly 5% gain from current levels. See anything else here? Um, yeah, that's about it. He's just kind of feeling that there's just too much positive sentiment in the market right now, and I'd agree. I'd have to agree with that. Getting back to some of your comments, let's see. Rumpelstiltskin, U.S. has to okay, a little bit of war talk there. Um, let's see, Desmond Cahill. You know what? Let's get a probable timeline when it all goes to a credit freeze. Dominance Bank and hedge fund failures, and the real valuation of gold and silver for physical. Yeah, that's the part. I mean, when you talk to people, or when you listen to them, a lot of them will say they had no idea that it could be stretched out this long. So you're trying to get a timeline on it. It's pretty rough because guys were saying from decades ago that they expected these things to come to head, but somehow the bank just keeps it rolling. Governments they just keep it rolling. You think the repo market can go on another full year? I think the repo market can go on until people actually lose confidence in that U.S. dollar, which is what we're going to talk about later on. Um, when you it comes down to that confidence. Almost anything could be considered money or currency anyway. It just depends on how much confidence you have in whatever you're accepting, whatever you're taking in. It all depends on that because you in turn then have to use that for something else, whether it's to buy more supplies for your business, whether it's to buy food, clothing, whether it's to provide for your shelter. Whatever you take in, you have to be able to reuse it. And if you can't, then chances are you're not going to consider that currency. You're not going to consider that money. So I think repo market will continue until people start walking away from the U.S. dollar or losing confidence in it, and which is going to bring us into the latter half of the show where we're going to talk about if the U.S. dollar goes, what are we looking at then? What type of currency are we going to be looking at? I know we talk quite a bit about it, but it's things seem to be getting a bit closer to where that the dollar does have an expiration date on it. All fiat currencies have an expiration date on it, and that time does seem to be coming a bit quicker now, more than ever before. So more than the past 5, 6, 7 years, anyway. Um, where do I see Patty Irishman? Where do you see silver prices in the next 6 months? Well, to be honest, I had seen silver at 19 by the end of the year, and I thought I was going to be right because it gradually crept up to the 18 range, and I thought, yeah, it's going to hit 19, and I had said that before, but yeah, it was able to. Silver had a few beat downs, and it just didn't get there, just did not get there. So um, I'll own up to it. I thought I'd be looking at least 19 by year's end, but I guess we're still gonna be in the hopefully in 17 range. Maybe if we can creep up to 18, who knows? But okay, I gotta own up to that. I said 19, so anyway, I'm not gonna back away or hide from it. I did say 19. But where do I see it in the next 6 months? I think there's going to be a lot of uncertainty with the U.S. dollar in the next 6 months. So I think that should push up silver and gold a bit. And like I say, it's because we do see a lot of countries mentioning that they're going to do their own thing, which we're going to get into. We're definitely going to get into. One of those countries is our neighbor over in Singapore, Malaysia, and they recently came out with this action where Mahathir, the Malaysia's prime minister, is saying, he wants Muslim nations, or at least four Muslim nations, will consider gold as a barter trade to beat future sanctions. And again, that's one of the reasons why countries are looking to get off the dollars because lately the dollar has always been a tool that can be weaponized whenever whenever the government, U.S. government, feels it needs to sanction. So countries now are looking at ways to get away from that dollar, and in this case, they're looking at gold. So this is the president of, or prime minister anyway, of Malaysia. Excuse me. Iran, Malaysia, Turkey, and Qatar are considering trading among themselves in gold and through a barter system as a hedge against any future economic sanctions on them, Malaysian Prime Minister Mahathir Mohamad said over the weekend. At the end of the Islamic summit in Malaysia, Mahathir praised Iran and Qatar for withstanding economic embargoes and said it was important for the Muslim world to be self reliant to face future threats. With the world witnessing nations making unilateral decisions to impose such punitive measures, Malaysia and other nations must always bear in mind that it can be imposed on any of us. U.S. allied Arab states, Saudi Arabia and the UAE, Bahrain, and Egypt cut diplomatic and trade links with Qatar about 2.5 years ago over allegations it backs terrorism, a charge Doha denies. Iran, meanwhile, has been hit badly after the U.S. imposed sanctions on it last year. I have suggested that we revisit the idea of trading using gold, using the gold dinar, and barter trade among us, Mahathir said, referring to the Islamic medieval gold coin. We are seriously looking into this and we hope that we will be able to find a mechanism to put it into effect. The leaders agreed they needed to do more business among themselves and trade in each other's currency. So again, this is partly, I'll say partly because I don't believe it's the entire reason, but I'll say partly they are looking to get off the dollar because the dollar can be used as a weapon against them. Taking a look at your comments again. Uh, Desmond Cahill. I'm retired in Thailand from Canada. Bought top currency in the world. Joke, yes, killing the export industry here. Let's see. Full name: Trump keeps trying to pump the markets. Tweeting breakthrough with China trade deal will be signed shortly. Yeah, that's true. I mean, anytime Trump found that tweeting about the China trade deal pumps up the markets, and when those markets get pumped, we see gold and silver start to take a bit of a nosedive. But I think he's kind of found that through his presidency that his tweets can, without a doubt, push markets either way, whichever way he needs them to go. And he's even already made comments, but this is true now. He's even made comments that stock market has gone up, and he said so has your 401k. Um, so that part is true though. When those markets go up, your 401k is going up, and again, to remember now, when those markets go down, your 401k is going to go down. So as you always hear me say, just about every week, look into rolling over that 401k or part of your 401k into a precious metals IRA. That way you take some chips off the table and you're a little bit more stable. Again, isn't financial advice, professional or otherwise. I'm just saying you may want to talk to a company that can explain a precious metals IRA to you because you I'm saying it from experience. When 9/11 happened, I my 401k took a huge hit. And again, not to make light of any lives that were lost, but just to say that when the markets, go through a bit of turmoil, your 401k is going to get nailed. It's going to get slammed. And a lot of us are getting older. We may not have time to recover to push that 401k back up. So talk to someone about a self-directed IRA, a precious metals IRA. It could be in your best interest. So anyway, back to some of the comments. Rumpelstiltskin, France is an awful mess. No Western media coverage in France either. Uh, okay. Um, I haven't seen much coverage in France to be honest. Let's see. Rogue Silver, he's gonna. Okay. Thomas Tubes, how you doing, buddy? Okay, so That was Malaysia, and so those are some of the news items, and but going back, taking a look back and then taking a look forward, 2019 going forward into 2020, I found clips from a few people that I wanted to share with you, and the first is from Joaquin Miller, who I think a lot of you folks are familiar with. This is what he had to say, and in the end was something pretty interesting.
For the time being anyway, this obsession, if we can call it that, with inflation has driven these insurance cuts and helped once again to reflate financial assets. 2019 was an extraordinary year for investors. How did you do?
Not as well as I would like. I just got into double digits. Last week I wouldn't even been able to say that. I'm just too conservative in my old age. I was well positioned, but very timidly. I'll leave it at that.
Why are you timid? You got nothing to lose.
I have a lot to lose. That's one of the reasons I'm timid. I don't know, when I was competing and managing other people's money, I'm a very competitive person, and I felt the compulsion to take risks. I'm still a competitive person, but it's either that or something about my age. I don't trust myself, or the last year in particular, I've just never trusted this administration not to do something that would preclude me from taking positions that I just felt were safe and secure and all in risk. And I think, unfortunately, a lot of people probably felt the same way. As you know, people have actually sold equities and put them into bonds this year. I didn't do that. I was just timid about what I did do. But this administration, with wondering about where the hell the next bomb is coming from, just doesn't allow me to take some of the positions I've taken historically where I just thought it was a one-way bet. To me, this was always binary and a two-way bet.
It's not just policy uncertainty, it's something, what would you call it?
Policy uncertainty is a great term. One of the reasons I'm pretty sanguine right now is I think we're close enough to the election, and at least we can breathe for a few months, that I don't expect any dramatic policy that can overwhelm the favorable backdrop of monetary stimulus and a decent economy.
It's awfully hard, of course, to predict when the next downturn is going to come. Do you have any idea, Stan, particularly as someone who's made more money in bear markets than in bull markets, what will trigger it?
Yeah, if there's a political event, change of leadership in the White House, that goes to some of the anti-capitalists, I would think that would definitely trigger a bear market. Whether it would permanently end the bull market, I don't know, but that would trigger it. The other thing that would obviously trigger it is if by the end of this year we started to get enough inflation that the Fed started tightening. And then, of course, the other thing is if we had a credit event. And if you look at the credit markets, it's very obvious that you got a really lot of bad apples out there that are not being exposed because the interest costs are so low. By the way, one of them being the U.S. government. We're running $1 trillion deficit. Why? Because we can. In fact, a lot of these new professor geniuses think this is just a free lunch. But I would think it's one of those three events. A, political. B, change in Fed policy, because, who knows when inflation turns? You can come up with a theory why it would turn. I kind of believe the secular forces will hold it down, but I've been wrong before, and I'll be wrong in the future. And then the third one is, and this is more what happened in 07, 08, the bubble just collapses on itself because things have just gotten so ridiculous. I don't think we're anywhere near there, but I've been wrong before. And, these things seem to happen after elections.
These things seem to happen after elections. Well, we saw when Bush came in, baby Bush came in, 9/11 happened. After that, when Obama came in, we had 2008 financial crisis. And nothing really so much happened first term for Trump. Well, besides him, besides people wanting him impeached from day one. But I think it's a re-election, 2020. And I say that because, I think either way, the U.S. anyway is going to be divided. I mean, there's no doubt about that. And it's I think either way, there's going to be a bit of division, and not to politicize things too much, but that can definitely cause instability. Where if you're other countries and you're looking at the U.S. dollar, you may be thinking, hey, wait a minute, no, I may not. I need to get away from this U.S. dollar. I don't know what's going to happen with the country. Again, regardless of who steps in the White House, it's just been building for a long time. It has been building and building and building and building, and you know. So again, if you're holding U.S. dollars, you may be looking for, not holding, but I should say, if you're trading in U.S. dollars, and you're a foreign country or a different country, you may not want to be using U.S. dollars as much as you have been doing so in the past. And again, we're gonna get into this, if countries should move off the U.S. dollar. We're gonna take a look at that. So again, some of your comments. We'll take a quick look. Let's see. Let's see. Nameless guys, give me some uncommon knowledge for finance or business domestically or internationally. Um, we it can be done, but at the same time, we do realize there are some new folks coming into to the fray. So we try to take a middle ground here. But there are places that you can go to, or we could head in that direction. But again, we want to keep everyone in the we don't want to lose anyone along the way, where if something went too far, too advanced. So we try to keep it more where the masses are. So let's see. Good point, though. Rumpelstiltskin, the Fed is turning into a volcanic eruption when it blows. They are printing USD like madmen. Now, absolutely they are. And again, that's the reason why a lot of countries are getting a bit concerned. But talking about the Fed, we had Fed, I believe it's St. Louis, so from the St. Louis Fed, Williams. This is what he had to say about repo.
Another big area of concern of yours is the overnight lending market, the repo market. Do you feel confident now that after several moves by the New York Federal Reserve to inject liquidity and make liquidity available to the banking system and to the overnight lending market, is there enough liquidity to avoid some kind of crisis or rise of risk over the turn of the year?
So obviously for the last several months, the FOMC and the Federal Reserve Bank of New York have made, I think, really important decisions to make sure there are ample reserves in the system. We've taken actions in terms of building up our reserve levels through the purchases of T-bills, and we're doing overnight and term repo operations that add reserves to the banking system. Those have been highly effective. We're seeing interest rates like the federal funds rate, our target rate, staying right in the range that the FOMC set. We're seeing money markets operate very smoothly. Now, at the end of the year, typically at the end of the year, there are pressures that move certain repo rates and interest rates around for various reasons. I'm guessing that will happen this year as well. But from our position, we are, I think, in a very good position in terms of providing liquidity, providing reserves to the system, and importantly, keeping the federal funds rate in the range through the year, and also making sure that markets are operating smoothly.
Yeah, of course, it's going to stay. The federal fund rates are going to stay within the range. The Fed has become the repo market. Of course, it's going to stay in that range. Fed Williams basically just parroting Jerome Powell, whatever he had to say, and it's a bit disappointing. Another Fed guy, Kaplan over from Dallas Fed, he had some interesting things to say as well that I want to share with you.
You're a voter next year.
Yeah.
Let's put that on the table. You've made it clear that you're one of the 13 FOMC members. You must be one of the dots that sees no moves, no rate cuts, no rate hikes, unless something happens in 2020. Mm-hmm. What has to happen?
There has to be a material change in the outlook, either for better or for worse. I've already got baked into my outlook. We're going to have weak manufacturing next year, sluggish global growth, pretty sluggish business investment, but with a strong consumer. There would have to be some material change from that outlook.
Which way are the risks tilt in your mind?
I think it's fairly balanced at the moment, and for a number of reasons. I'm hoping we'll get some stabilization in trade. I think the moves the Fed has made have also been helpful, and I'd say the risks, though, are balanced.
If you see the risk tilting toward the upside and the possible need for a rate hike, would that be hard to do in an election year? Would you consider that ill-advised, something the Fed will try to avoid?
It will not be a factor in my thinking, in that I'm going to, as usual, divorce political considerations, political influences. I think we'll try to make the best decision we can in light of the circumstances, use our best judgment.
You know, you repeated this morning, as you have said for a while, you expect 2% growth next year.
Yeah.
That hasn't changed. 3.5% unemployment.
Yeah.
So it sounds to me like you don't really expect the passage of the phase one trade deal to have much impact on the economy, certainly not out of the gate.
Yeah, probably that's probably correct. I'd been hoping there would be some trade stabilization generally. This is part of that. That's not to say, and you've heard me say this before, I think the trade issues with China are going to go on for years, not months, but years. I think most businesses are adjusted to that. These issues of intellectual property, technology transfer, and the much deeper issues with China are going to be going on for a long time. And so phase one is better than not having phase one, but it doesn't mean there won't still be trade uncertainty.
So even though phase one deal passes, there's still trade uncertainty, and it's going to go on for quite a while, according to Fed head from Dallas, Kaplan. And this is another thing that he had to say that was pretty interesting. So bear with me, one more clip.
You mentioned weaknesses, and I'm just curious because corporate debt trading at distress levels reached a high in November. We're at 130 billion almost, and triple C spreads have blown out now to about 900 basis points just in the last few weeks. How concerned are you about that area?
So when I see triple C spreads widen, I'm not concerned. I'm actually more encouraged. What gets my attention more is that single B and double B credit spreads are so tight. Triple B spreads are very tight. If I see evidence that the market is sort of distinguishing between lower quality credits and better credits, I actually think that's an encouraging sign. My bigger worry is you've got increasing PEs, you've got historically low cap rates, you've got very tight credit spreads, and I'm just keeping a close eye on excesses and imbalances, particularly when corporate debt is historically high. Triple B debt has tripled. Double B and single B debt has increased dramatically, and I'm cognizant of that and watching it carefully to make sure we're not creating excesses, undue excesses and imbalances that are hard to deal with later.
Okay, so he's getting concerned about corporate debt, and we've been talking about corporate debt for a few weeks already, especially referring to those CLOs. And he made a point where he's saying there's not much difference between B, double B, triple B, which means the triple B should be risky, but because that spread is so small, guys are taking on that little bit extra yield, even though they are in the category of a riskier debt that they are taking on. So he's a bit concerned about that, and I guess they're watching it quite a bit. And he's been coming out quite a bit saying a few things, and there was also an article that he wrote a few months back that is getting to be pretty darn telling of what may be going on in their minds, and I want to share this with you as well. This is an article that he wrote, Robert S. Kaplan, president of the Dallas Fed. Let me go down to section 4 here. And what he had wrote is the path of U.S. government debt to GDP. U.S. government debt held by the public now stands at approximately 76% of GDP. We're getting that? Public debt held by the public now stands at about 76% of GDP. And the present value of unfunded entitlements is estimated at approximately $59 trillion. Recent tax legislation and bipartisan budget compromise legislation are likely to exacerbate these issues, and the U.S. deficit is poised to exceed $1 trillion in 2020. As a consequence of the rising level of debt, the U.S. will have less fiscal capacity to fight the next recession. Okay, here we go. The U.S. relies heavily on the presumption that the dollar is likely to be the world's reserve currency for the foreseeable future. One more time. The U.S. relies heavily on the presumption that the dollar is likely to be the world's reserve currency for the foreseeable future. That is, global investors tend to overweight their asset allocations to dollars. This, of course, is highly beneficial when the projected issuance of U.S. Treasury securities is likely to rise substantially. However, it is worth considering the implications if the dollar ceases to be the world's reserve currency sometime in the future. It's wise for the U.S. to rely. Is it wise for the U.S. to rely so heavily on this presumption in managing its financial affairs? So we got a Fed president out of Dallas. He's making note that you know, it this is all under the assumption that the U.S. dollar remains the world's reserve currency. So coming from one of the Fed heads over in Dallas, he's starting to kind of lay out the or put the question out there. Well, what do we do if it's not? Because right now we think it will be. Meaning, what do we do if the dollar is not the reserve currency? Because right now we think it will be, and we think it always will be. But what if it won't? In other words, before, where there was not even a thought crossing people's mind, there is today. That thought is starting to cross people's minds. So looking at some of your comments again, Desmond Cahill, Americans are going to get nailed. You know what? It's not just the U.S. because when that dollar goes, a lot of fiat is going to go with it. So again, wherever you are in the world, if you're holding fiat, fiat has an expiration date. It's going to move over into something else. So yeah, I mean, all fiat has an expiration date. So let's see. Going down a bit. What's the value, Mark W? What is the value of a reserve currency when it has no purchasing power? Never in history has fiat paper not returned to its intrinsic value of zero. Mark W, that's exactly right. What is going to happen? Because again, fiat has an expiration date, and I know we talk about the scenario from time to time where, when things start to go, is it going to be a market event? Is it going to be a financial event? Is it going to be a credit event? What type of event is going to really start to unwind the whole monetary system? Because I think each of these things would act in a different way. If it was a market event that happened first, meaning stocks started to take a hit, as opposed to if it were a credit event or a financial event, I think things would unfold in a slightly different way as well. But again, with that scenario, especially with the market, if it's a market scenario where the markets tend to go down, I think that's where it is a good idea to have cash. Cash is going to be good for a while, especially in the beginning. You will want that fiat. That fiat's going to do well, but it's going to have an expiration date. It's not going to be good the whole time because, again, that confidence is not going to be in there. But in the beginning, I do think, fiat definitely has a place. But again, I also do definitely think it has an expiration date. So you want to have it, but you don't want to have you don't want to be all in. You don't want to have too much of it. You need to have something that's going to store the value of your fiat store of wealth. And again, that's the reason why a lot of us look at gold and silver. That's what it's going to do for us. It's not just that price action, that price movement every day. So we saw Kaplan a couple times, and he did mention again, what if, because we're presuming the U.S. dollar is going to be the U.S. or going to be the world's reserve currency forever. But this article came out from, I believe it's CoinDesk, where a top Fed official says U.S. central bank actively debating a digital dollar. Well, dollars are kind of digital, but this is in a different sense. A top Federal Reserve official said, this was a couple months ago, that the U.S. Central Bank is actively looking at and debating issuance of a digital currency among growing worries among current and former regulators that the dollar might be at risk of losing its status as the world's reserve currency. Okay, we have not at the Fed decided to pursue or drive to develop a digital currency, but it's something we're actively looking at and debating. And again, this comes from out of Texas, the Federal Reserve Bank of Dallas. This is President Robert Kaplan again saying this. As a former Goldman Sachs executive with the most extensive capital markets experience among members and alternates on the Fed's key monetary policy committee, Kaplan said the U.S. could suffer a higher interest rate or higher interest costs, if a foreign government or another entity developed an alternative currency that received widespread adoption. So again, U.S. could suffer higher interest costs if a foreign government or another entity developed an alternative currency that received widespread adoption. His comments came after former Commodity Futures Trading Commission Chair J. Christopher Giancarlo wrote in an op-ed piece that called for the U.S. to create a digital currency to avoid the risk that the dollar might lose its reserve status. Giancarlo now serves as an advisor to the Chamber of Digital Commerce, a trade group focused on blockchain and crypto policy. Because of the dollar's prominent role in international commerce and the dominant U.S. leadership position in global affairs over the past century, many foreign central banks, commercial banks, and investors hold assets denominated in the American currency. If that stopped happening due to the existence of an attractive and viable alternative, confidence, the thinking goes, then demand for U.S. assets such as treasury bonds would shrink, in turn pushing up interest rates on the national debt, which is now approaching an unprecedented $23 billion. Kaplan noted that the U.S. government's interest payments could jump by some $200 billion if a loss of the reserve currency sent interest rates jumping by a single percentage point or 100 basis points in the lingo of bond trader, excuse me. Um, it just reinforces the dollar may not be the world's reserve currency forever. And I think we all know and understand that, but really it's just to plant the seed in our mind. What are we going to do? So if it changes and you tack on 100 basis points to 20 trillion with relatively short average life, that's a lot of money. Uh, so okay, I think we kind of get more or less get the idea of this is that it kind of goes back to and I mentioned this before our first interview with Danielle DiMartino Booth when I had asked her about cryptocurrencies, a type of a Fed coin, and she said we would have to do it for national security. We meaning the U.S. She said the U.S. would have to do it in the name of national security, and I think she's correct. She is correct, and we're already seeing other countries. Russia's already going on with their own cryptocurrency, looking into it. And again, in Europe, we're already seeing them trying to bypass the dollar, and we have China who is absolutely taking the lead. We've even had Facebook trying to push out Libra. So these things are really happening. But he did mention this guy, Giancarlo. So I just want to take a quick look at this gentleman, Giancarlo, known as Crypto Dad. So anyway, ex-CFTC chair Crypto Dad Giancarlo joins Digital Chamber Trade Group. Okay, this is something I admit I never heard of before. Crypto Dad just can't stay away. Former CFTC chairman, the chairman of the CFTC, J. Christopher Giancarlo, has joined the advisory board to the Chamber of Digital Commerce, a trade group focused on blockchain and crypto policy in the U.S. Giancarlo helmed the CFTC for 2 years following a 3-year stint as a commissioner with the agency. Under his watch, the CFTC allowed the first Bitcoin futures products to enter the space. So this is the man. It was under his watch. Okay, so he allowed the first Bitcoin futures products to enter the space. Most famously, Giancarlo told the U.S. Senate Banking Committee that in his view, do no harm is the right over overarching approach for the blockchain space. His recommended approach earned him the nickname Crypto Dad from the community, a moniker he has embraced. In a statement Tuesday, I think this was a while back, this article. Anyway, he says the chamber is at the epicenter of this emerging field of technology that can only be described as a movement, adding, I'm looking forward to joining this group of advisory board leaders from many fields and areas of expertise whom are already working to promote the adoption of this transformation or this transformative technology. It's my hope that together we can streamline and modernize the regulatory environment and encourage further blockchain innovation. So, again, this is where we see things heading. It is heading into some type of a cryptocurrency, whether it's a Fed coin, some type of central bank coin, some type of sovereign government coin, whatever it is. We're definitely heading into that into that direction for sure. Okay, comments here. Let's see. Giuseppe, don't put any money into crypto. BTC just went on. Okay, we're gonna have a little bit about that also. Uh, Crypto is smoke and mirrors from Thomas Tubes. Let's see. Let me go down a bit. Robin, stay by. First time I've seen you here. Welcome aboard, Robin. There are so many US dollars out there. It's going to take a long time before it loses power. Robin, that part is true. I mean, overwhelmingly, the US dollar is still the currency of choice, the trade of choice. Well, maybe not by choice, but it's the currency that's most used throughout the world. And it is hard to dethrone the dollar. And in this article from Washington Post, why it's so hard to overthrow the US dollar. Russian President Vladimir Putin is acting on a pledge to shrink the role of the US dollar in international trade. Jean-Claude Juncker, outgoing president of the European Commission, says it's absurd that Europe uses the greenback for 80% of energy imports. Chinese President Xi Jinping has rallied against economic hegemonism. Can the mighty dollar retain its global dominance when attacked from so many sides? But don't just count it out yet. So why are people getting upset with the dollar? Because it's so prevalent. US currency is on one side of almost 90% of foreign exchange transaction and accounts for two-thirds of international debt. Almost all international trades in oil are priced in dollars, hence the term petrodollars. That ubiquity makes nations beholden to fluctuations in its value and ties their economies to decisions made in Washington. As Juncker intimated, it makes sense for European countries to pay for their energy needs in euros rather than dollars. Then there are the countries that get on the wrong side of American policy, and we know then US dollar tends to get weaponized. Basically, this article is just talking about how difficult it is to get rid of the US dollar. Um, Too much to bother. Shifting to the euro, won, or ruble means higher costs and difficulties finding banks to handle business. Euro's allure as currency to back trade and investment has hardly been boosted by the region's 2010 sovereign debt crisis and the European Central Bank's use of negative interest rates. Volatility and scant volumes in emerging currencies make for higher trading and hedging costs. Russia's first year of diversifying away from the dollar illustrated another peril. In a strong period of the dollar, the country missed out on 7.7 billion in potential returns on its foreign exchange reserves. But can any currency compete with the dollar? This is always the question. Euro is the only one that's close. That was the conclusion of a European Commission report on strengthening the international role of the currency in June of 2019, earlier this year. The rifts with U.S. President Trump over trade tariffs as well as the sanctions on Iran has pushed the EU to seek greater financial independence. The report also found potential for boosting the share of commodities transactions in euros with so many national governments to appease, though progress on big European projects like this tends to be slow moving. Bank of England Governor Mark Carney says it would be a mistake to switch one dominant currency for another. He advocates a global digital currency to supersede the dollar. Another one calling for a digital currency. In his case, it's a global digital currency. And when guys talk this way, a global digital currency, when they're talking about some type of global crypto, whatever it might be, this is why I tend to believe it may be a gold backed type of Fed coin, central bank coin, government coin, whatever it is. This is the reason why I tend to think it's gold backed, because that way you have some sort of a neutral asset behind each of these cryptocurrencies that are backing it. And again, this is the reason why I do think we're looking at some type of gold commodity type of back crypto. Um, but it is hard to get off the dollar, and it's kind of interesting because this debate has been going on for a long time, and I want to go back to 2011 when a lot of the things that we're seeing today happened. They've never been solved. They've just been kind of papered over. So we go back and we look. This is way back in 2011. This same question was being asked: what will replace the dollar as a global currency? And let's see. Let me go down a bit. Um, let's see. Hang on. It basically, I'm trying to find one part here. Sorry about that, guys. What it basically was looking for is what they were trying to. Here we go. So one thing they thought would replace the U.S. dollar is the renminbi. The world's reserve currency is usually the money that circulates in the world's biggest economy. That was the true. That was true of the pound in the 19th century and the dollar in the 20th. And if the Chinese economy is the world's biggest, as it soon will be, that is going to be the currency that really counts. So again, this is back in 2011. People then were trying to figure out what's going to replace the dollar. So one of those things was the renminbi. Another possibility is a currency unit based on a basket of commodities. After all, raw materials is the one thing that every country absolutely has to have access to, and every form of money is a proxy for real stuff in one way or another. A unit that was one part gold, one part oil, one part iron ore, one part rice would look like something that was going to hold its value for a long period of time. And again, this is why I say I think it's going to be some type of either gold back or a commodity back type of a thing. This was also mentioned back in 2011. So we'll see what happens with this. Uh, but let me get to one more part of it. Hang on, guys. What will it be? It makes a huge difference. If it is the renminbi, you need to buy into Chinese assets, regardless of the fact they may look overvalued right now. If it becomes a reserve currency, everyone in the world will have to hold it. Chinese government will get a lot of very cheap capital, just as the U.S. did when the dollar was dominant. If it's a commodity-based currency unit, this is what this guy's looking at also. Then the one big call you need to make for the next decade is to keep buying raw materials, even when they do look overpriced. I think they tend to look underpriced right now. Either way, the euro looks finished, and the dollar is headed for a more minor role in the world economy. Um, so this is way back in 2011, guys. We're trying to figure out what it was going to be. But there is one part I can't find it. I wish I would have marked it somehow. But this author did also say, or maybe it's something that we just don't know about yet, which takes us to cryptocurrencies. Because back in 2011, it was still in its infantile stage. So, coming forward from 2011 to 2019, when this author had mentioned that maybe it's something that we just haven't heard about yet, could be that cryptocurrency as well. Taking a look at comments. Let's see. They pay with Alipay. Yeah, that is a big thing in China. In fact, we'll get to that shortly. Um, so with this though, I want to sorry about that, guys. I want to play one more clip about, we mentioned, if it's going to be some type of Fed coin, sovereign coin, central bank coin, whatever it is, if it's going to be some type of maybe even corporate coin, like let's say Libra, whether it may be that. These young men from Yahoo Financial, they kind of went over this back and forth, and it's a pretty good conversation. So I just want to share this with you.
Today we got Dan Roberts, so we're talking a little bit of crypto. RBC out in a note saying that should the U.S. fail to create regulation that encourages growth in the crypto space and thus dismiss Libra, which is kind of falling apart on its own, RBC warns that China could be positioned as the leading global digital currency economy. So I think this kind of fits a number of buckets here that everyone has when it comes to broad worries. One being, how does China emerge as a leading economy? Do they become the leader in the crypto space? I'm not exactly sure, Dan, how closely that is tied to the fate of Libra, considering the Libra Association is based in Geneva. They don't seem to have agreement with their members in the first place. But I wouldn't also rule out that a more centrally planned economy like China could end up being the leader. It's just not clear what that leadership role would mean.
Well, given everything going on right now, politically, macroeconomically, I don't see how it would be China. So there are a lot of leaps taken in this note. And in fact, right away off the top, we have a pretty big contradiction that we're sort of getting into. So let's actually dive deeper here. Okay, so the prediction that you could see China's central bank digital currency grow, and then it says, especially if U.S. regulators dismiss Libra completely and do not draft new regulation to encourage crypto innovation. By the way, I don't think we're going to see new U.S. regulation specifically to increase crypto innovation. But then to say that if that doesn't happen, China could fill that gap. But then it says, or then RBC says, regardless of Libra's regulatory scrutiny, we believe Facebook will continue to pursue crypto. So, well, wait a minute. I mean, there's sort of a couple big ifs there.
Yeah.
And I do think that Libra is going to continue to face regulatory hurdles, but I don't think that there's any way that it is going to be completely halted. Lawmakers can send letters to partners, which they did, and in some cases, it worked. And Visa and MasterCard and Stripe dropped out. Fine, those companies say the heat is too much for us. But I do think this thing is going to launch. Now, maybe it won't be a huge success. Maybe it won't get huge adoption. Some people will tell you that because of Facebook's scale, even if only a small portion of Facebook users buy some Libra coin, it'll be huge because Facebook has a huge number of users. But I do think it'll launch. Maybe it won't look quite how Facebook dreamt it would look a year ago because of all the heat. But boy, to say that China has the opportunity to be and establish the leading kind of government-backed crypto, I don't think so, because I don't think you'd get places outside of China to embrace that.
I guess, right. I mean, my thing is, are we even sure that would amount to anything? I guess the other thing, too, is this all is sort of under a working assumption that the dollar's primacy can't last, and yet every time we see stress in the global economy, people want to acquire more dollars. So
Fiat's doing fine.
But not just fiat, the dollar, right? Is the
Our
U.S.
fiat.
dollar, our fiat, right? That we issue, we can create as much.
We like it.
So I still feel like we're grasping at some sort of future here.
Although we're kind of behind emerging economies. We've seen that with Alipay, WeChat, how they used, and BitPesa when we were doing all sorts of other stuff. So maybe there's a place.
Well, let's
for
be clear.
somebody
These
else.
things are huge in China, but not necessarily used outside of China.
Yeah.
Okay, so they did mention Libra, they did mention China, and this is one thing that I wanted to show you guys from last week, where within the U.S. Congress, they do acknowledge that Libra may potentially be a big thing, and they're making provisions for it, provisions to actually block it. This is from Representative Jesus G. Choi Garcia over in Illinois. What he introduced was House Resolution Bill 4813, where he wants to prohibit large platform utilities from being a financial institution or being affiliated with a person that is a financial institution and for other purposes. So what he introduced is that a large platform utility may not establish, maintain, or operate a digital asset that is intended to be widely used as a medium of exchange, unit of account, store of value, or any other similar function as defined by the Board of Governors of the Federal Reserve System. So, yeah, got to protect the Federal Reserve, right? I guess that's what he's kind of trying to do here. For the purpose of paragraph 1, the Board of Governors of the Federal Reserve System shall define the terms medium of exchange, unit of account. So basically, it was a bill that was introduced, and bills eventually can become laws. Where this bill is stating that they don't want basically the likes of Facebook or any other big let's just say it's social media platform, or maybe even corporate entity, to have some type of crypto coin that we all end up using. So Libra has a huge amount of headwinds with this bill on the floor, especially if this bill should pass and become law. That basically shuts down all types of cryptos from social medias, the bigger platforms, and I'm thinking even corporate, because if you can imagine, if corporate America came out with some type of a crypto coin, that will be something pretty huge as well. But if the social media giants, if Facebook, Twitter, YouTube, all of these guys, if they were to combine and form their own type of coin, that would definitely take a lot of the power of the Fed away, or strip a lot of the power from the Fed away. So they're trying to create some kind of a, well, they created the bill, but they're trying to see if they can pass it through and basically outlaw this type of a thing from happening. So that's pretty interesting as well. But from Bitcoin enthusiasts, this is an article from CoinDesk. They came out and said, this is in August of 2019, Bitcoin won't be a global reserve currency, but it's opening the box. So let's see. He goes on to say, celebrating the 75th year of Bretton Woods conference is probably not high on the list of priorities for cryptocurrency enthusiasts. This is understandable oversight. The price swings, confusing product launches, and whereabouts of Justin Sun are perhaps more compelling. Okay, let's just move on with this. But the birth of, excuse me, international economic cooperation and interoperability should be recognized as the beginning of a process of economic reconstruction that has contributed to the global imbalances worrying the markets today. It could also have set the scene for the solution. The bulk of the US stock market may be overvalued and yields look set to go even lower, but a large part of the current strain lurks under the surface of the currency market. Combination of monetary easing, trade tension, and the threat of military action in the Middle East is a noxious cocktail for currency holders and hedgers as international conversions get risky and costly. So let's go down a bit. Um, Hang on. So in 44, a bit of Bretton Woods, an agreement was drawn up between delegates from the 44 nations that established the US dollar as the world's reserve currency, which would be pegged to gold. The other member nations would peg their currencies to the US dollar, and the resulting relative stability between denominations would smooth world trade and boost the post war recovery. The agreement also created institutions, the IMF and World Bank, to coordinate global currency movements and to channel loans for developing nations. We know the U.S. went off the gold. They closed the window for gold being linked to the dollar, and so let me go down. The new reserve currency. Okay, given the growing doubts, excuse me, over the need for and advisability of a fiat-based single issuer global reserve currency, you can see why the Bitcoin narrative would pop up. Surely a sovereign free algorithm based alternative would be more stable and trustworthy. Perhaps, but it won't be Bitcoin. First, the global currency needs to have a flexible supply. The limits on the amount of gold banks could hold was one of the main reasons the gold standard didn't work. Economic growth outstripped the supply of gold backed money, and the inevitable scramble to overcome this limitation led to destabilization. Second, Bitcoin will not become a universal settlement token for trading contracts. It's too volatile. While this should soften in line with greater liquidity, it's unlikely that businesses and sovereign powers will give up their preference for fiat, which they have some control over. So this was coming from CoinDesk, and even they were acknowledging it probably won't be Bitcoin. They mentioned how the dollar went off being gold backed, and if gold were to return, I think we all know that gold would need to be revalued to a higher price if it were going to become some type of a backing for the next currency, which is possible. That can be done. I guess this article, Bitcoin, because it has a finite number, there would have to be changes for it to be able to be a reserve currency. Um, there, I think there would need to be more of that Bitcoin. With gold, you always have new supply coming in every year, but that supply is not overwhelming where you could call it inflation because economies grow anyway. So you do need that little bit more of gold as a backing to be brought in to back the so-called money to go with the economies as they grow. Sorry about that. Got something else on my mind. But okay, with this, there's also a problem because mining. And I had mentioned last week how I think in China, 66% of the mining was being done in China, and that is something to be concerned about, as James Rickards explains here.
It takes 51 or 50 plus, percent of the mining power to validate a blockchain. I run the computer, I solve the problem, I post it, the miners come in, there's consensus, yeah, that's good, Jim solved the problem, that becomes part of the blockchain, and then you go on to the next block. They presuppose that nobody could get 51% of the mining power. Why not? I mean, an aircraft carrier is $7-8 billion. It's not like, if you think of it in war terms rather than, kiddie, video game terms.
Right.
What's to stop Russia from acquiring 51% of the mining power at a cost of billions of dollars, powering it with their own hydroelectric grid, and validating their own blockchain that says we own all the bitcoins?
So it could just be taken over and completely
Correct.
hacked.
Correct.
Okay.
Not even hacked. It would be legitimately taken over by a consolidation of mining power and cheap electricity, and you couldn't do a thing about it.
Yeah, so that's a pretty interesting point that James Rickards had to make about the mining power there and being able to take over the Bitcoin. Pretty interesting point. Comments, haven't looked at it for a while, so let me get into this. All of you should, Thomas Soups, all of you should own a good 10 times jeweler's loop. Absolutely. For various reasons. Some coins, they do have various marks on them that can only be seen with the jeweler's loop. Some bars have hallmarks. You need that jeweler's loop to be able to see. And gold and silver just look a certain way, at least on the surface. Having a jeweler's loop is a good thing. You should all buy one. There's proof of work, and then there's proof of stake. Giuseppe, correct. I need to get more into that. Robin, Facebook needs to be smashed. You know what? I'm not sure if Facebook has done more help or harm. I mean, the way, it's just my opinion, but I think people have seemed to lost the ability to debate because Facebook has given everyone their own little safe space, and if they don't like hearing something, they'll just delete you as a friend, and it's all about it's a feel good thing, So I think it it has its pluses and minuses. I mean, it's good to keep in contact with family and friends, but I think also for those who grew up with it, they kind of start to use it as their own little safe space. No one can disagree with me, and if you disagree with me, I'll just unfriend you, and then you lose the ability to hear two sides of every argument. So I think that's one negative thing Facebook has brought in. But anyway, that's a different story. I don't want to get too much on that. Uh, let's see. James Richter, was that a clip of London Real's pay interview? Yeah, that was the free the free part. I came across it, and Rickards is right. From the week before when I found that article about 66% of the mining happens in China. and I knew that if it were over the majority, then there was a consequence that could happen. And so Rickers, he explained it here, which is pretty good. It's pretty insightful for us. Another guy, I think you guys all know him. He sees the value of two, gold and Bitcoin or crypto anyway, and I'll let you watch his clip.
The repo market is flashing financial catastrophe. And the reason it's flashing this, and markets are discounting mechanisms. They tend to be price sensitive to events that are not necessarily seen or known until they actually happen. And what's happening is that China is getting ready to open the trap door on the US dollar. Here's what I'm hearing, Daniela. China is about to announce that they, in fact, have not just under 2,000 tons of gold, but closer to 20,000 tons of gold on a very aggressive move to put the final nail into the U.S. dollar.
What's your source for that?
As you know, we do our show that's broadcast globally, and we have a lot of contacts all over Asia and in Eurasia and naturally in Russia. And the feeling is that this is the time for China to now step out and put to rest this idea of censoring their global trade, right, with the U.S. censoring SWIFT and other things that they do to curtail China in other countries, because China's making their big move, the big move for the 21st century. They're going to pull the trapdoor. And let me just add that they're also, as has been reported by the media, rolling out a cryptocurrency. A lot of the details have not been divulged. I can tell you that that cryptocurrency China's rolling out will be backed by gold. It's a two-prong announcement. Number one, China's got 20,000 tons of gold. Number two, we're rolling out a crypto coin backed by gold, and the dollar is toast. The dollar's going, like every other paper money in history, to zero. And you say, where's gold going? Is it going to 5,000, to 10,000? It doesn't matter. In dollar terms, gold is going to infinity. In dollar terms, Bitcoin is going to infinity because the dollar is going to zero, like every piece of garbage fiat money before it.
Whoa. Pretty strong, tough words from Max Kaiser. I do wish one thing though. I do wish he had named that source. That would have been pretty helpful if he named that source. But anyway, he does seem to think that China has some 20,000 tons of gold, and I don't think we can discredit that, because I think when it comes to something like that, it's almost a matter of national security, and I don't think China's going to exactly let you know how much gold they have. So I do think if he says 20,000, I would not be surprised at all, one bit. And he does say it looks like they're going to create, or they do have their own gold-backed crypto that's going to be announced sometime next year. We're getting close to next year. And he does say, they're going to open the sort of a trap door, and the repo market is not helping. And in fact, the reason why Max Kaiser, some of you mentioned his jacket, he was wearing that jacket. This interview was with Kitco. Kitco, he did say he wore that jacket because he was dressed up as the repo market. He wanted to frighten everyone because the repo market is frightening. So all credit to Kitco. And but he absolutely did have a few interesting things to say. Yeah, Max never holds back. American Rebel, absolutely. Let's see. Maybe nameless. Maybe his source is Jim Ross. Don't know. Who knows? Rumpelstiltskin Bitcoin backed by electrons, proof of stake, proof of work, things here and there. Jonathan Dixon, first time I've seen you here. Welcome aboard. 15,000 tons. I wouldn't doubt it. Would not be surprised at all. Would not be surprised at all. Minchin Sao, I don't necessarily trust Max, but I like his reporting. Max, we need to get him on. I would really love to have him on one day. Max, he's a gold and silver guy. I believe he was the ex Wall Street guy. Gold and silver guy, then got into crypto, made a lot of early calls with crypto, and he seems to have a pulse on a lot of things. The gold backed crypto from China, I would not doubt that. I think it's absolutely absolutely possible because the way China does things, the way they handle their transactions, extremely digital right now. Extremely digital. A lot of it is mobile phone to mobile phone. Less cash being used. In fact, in Singapore, we just had this fintech festival, I believe, not that long ago, and this comes from that fintech festival. I want to share with you guys.
You mentioned a great example. Yes, now people know now the digital currency from Bitcoin, yeah, which has been 11 years, proves to be a very strong network, peer-to-peer without a central intermediary, right? So this worked perfect, right? So now Libra thing and also even Chinese government is thinking about the digital currency. Everything is being cryptolized, doing a cryptographed and also being using by using blockchain. So this can also again significantly reduce the middleman costs and also being secure and also transparent and also immutable. So this gradually proved to be a more powerful payment tool for either financial regulator.
To your understanding, how far out is China in that process? I mean, how close are they to actually getting an e-currency into the market?
Yeah, indeed. China, I would say, will be one of the most favorable countries like to use this kind of technology. Number one, China government from PBOC has been tracking right where the money used for decades. You won't believe it. You know, even from ATM, when go to ATM to withdraw money, there's a kind of print the serious number. So government know where the money you get come from. So you know, by this kind of thin analogy, indeed, by applying blockchain, this is a perfect adoption for tracking the money. So number one, I think China government very welcome for this kind of technology. So number two, recently they already developed what they call the DCEP, which is a digital currency and electronic payment, which is a more kind of a hybrid version. Because China has a very strong third-party payment network, including Alipay and WeChat Pay. Yeah. So they use the digital currency issued by PBOC and through the commercial bank, and also integrate with the Tencent, Alipay, that kind of system to make it become all digitalized, and also go to the consumer, go to enterprise. So they already have all the system and the network ready. I think you will see it in a very soon, in the next maybe 2 to 3 months.
2 to 3 months. 2020 is when China comes out with its e-currency.
Yeah, I think this will come. But maybe will you have some test run first?
Sure.
Will not entirely replace, but you will see it very soon in 2020.
Woo! Now those were some pretty. I don't know if it's electrifying or terrifying. I mean, so this gentleman says China will be coming out with it in a couple months, which again is going to be within first quarter of 2020. He says the system is already in place. That is true. The system is already there. A lot of those things he was mentioning, the WeChat, Tencent apps, this and that, they are all mobile phone apps that are highly used in China. And he mentioned tracking. That is, for me, that's a bit of the dangerous part is the tracking. And you can't deny that part will have. It is part of the equation where they are going to be able to track, and I'm not sure how people will take that. Some people won't necessarily think it's a big deal. Other people, it's absolutely a big deal. But nonetheless, China has that DCEP system already in place. It's already being used. It just needs to be rolled out more for the world to see and for the world to use. And in fact, probably on your phones, a lot of apps are already developed by Tencent, whether you know it or not. And Tencent is one of those companies that are linked into this whole DCEP system. So we're going to have to see what happens with this. So I just want to take a look at a few more of your comments here. Let's see, Rumpelstiltskin, full name. I think most of them are sure the U.S. gold has long gone. You know, we've been hearing, it's gone. It's already left. We've been hearing it's still there. No one really knows, and that's why you need an audit. If you don't have the gold, an audit proves to be fatal, really, basically. If you do have the gold, an audit could be a national security matter where now you let the world know exactly how much gold you have, because I think there's this one phrase, who holds the most gold makes the rules, or something along those lines. So I think, gold has become the amount of gold you have is a little bit of a national security deal. We do know countries are buying gold. We do know central banks are buying gold. I think that's also in an effort where you need to have it as reserves. You need to keep up with what everyone else in the world is doing, and I think it's their way of saying, "Hey, we're buying, we're buying, we're buying." So it's a way to say, we're on your heels, or don't, you know. I think it's just a way for every country to keep pushing the whole, we have gold type of a thing. So every country recognizes it, and gives it that respect, that these countries are all gold buyers. They're not falling behind, or anything like that. So it part of it anyways. It's a psychological thing. Um, let's see. Jonathan Dixon, who holds the most gold and best defense, makes the rule. Yeah, you do have to have an army. That is for sure. That's for sure. Who's gonna do the audit? Well, would be nice if we could, if all of us could go in there and do it. But I do remember they had, I forget how many years back, someone went in and did the audit, and they had the serial numbers mixed up or something like that, or it was off, or it was wrong, and it was sort of a big, huge embarrassment, and that brought into questions, is gold really there or not? Because when they let this reporter in, they straight away found some mistakes with it. Um, let's see. Warren Buffett said gold is a relic. This is the same guy that bought a bunch of silver, right? So Warren Buffett saying gold's a relic, I would not believe that, one bit. I mean, I'm sure he knows the value of gold. Again, it's not the price; it's the ability for it to be a store of value. And again, looking at all of these people, what they're saying going into 2020, from Kaplan, the Fed head in Dallas, all over the place. All of these guys are saying something's going to change, and it has to change. It will change. Change is inevitable, and we may not entirely know what that change is going to be. But again, this is why you want to have a store of value for your fiat. Let's see, a couple more. Max Trapdoor from Robin Stable. Max Trapdoor will not open that easily, nor will China. The touchy part about this is, you cannot, if you have a new currency and you bring it in, the old currency, let's say reserve currency, is going to start to die, and then it becomes a matter of, does the currency go, have a peaceful passing, or is there going to be a fight to keep it alive? And I think that's a big question. I mean, can the US dollar as the world's reserve currency go quietly, peacefully into the night, and a new reserve currency take over, whether it's a crypto, gold back, commodity back, whatever it is? Is it possible? Do you guys think it's possible for it to have a peaceful transition? Will the US dollar go peacefully? I think that's a question we all have to ask ourselves. I I'm not sure it can go peacefully. I really do not. But anyway, that the gentleman, he did talk about the DCEP, and I just want to touch on that before I head out. Uh, this is from Reuters, and this was just in September of this year, where China says the new digital currency will be similar to Facebook's Libra. China's proposed new digital currency would bear some similarities to Facebook's Libra coin, and would be able to be used across major payment platforms such as WeChat and Alipay. Again, these are apps that are heavily used over in China. Uh, Mu Changchun, deputy director of the People's Bank of China, often PBOC, that's what it is a lot of times when you hear people say PBOC, uh, said the development of the coin would help protect the country's foreign exchange sovereignty as commercial applications of such currencies expanded. Why is the central bank still doing such a digital currency today when electronic payment methods are so developed? It's to protect our monetary sovereignty and legal currency status. We need to plan ahead for a rainy day. He said the tokens would be as safe as central bank issued paper notes and could be used even without an internet connection. They could also be used on Tencent's WeChat and Alibaba backed Alipay. Let's see. China's central bank set up a research team in 2014 to explore launching its own digital currency to cut the cost of circulating traditional paper money and boost policymakers' control of money supply. It had said little since then, but he announced that the digital currency was almost ready. U.S. financial magazine Forbes, citing sources, said the currency could be ready as soon as November 11th, which was last month. Some analysts say China appears to have accelerated the push to digital money after U.S. social media giant Facebook announced plans in June to launch digital coin Libra. China's digital currency would strike a balance between allowing anonymous payments and preventing money laundering. It would also bear some similarities to Libra in design, but it would not be a direct copy, he said, without elaborating. Facebook's proposed cryptocurrency has sparked concerns among global regulators that it could quickly become a dominant form of digital payment and a channel for money laundering, given the social network's massive cross border reach. Libra will be a digital currency backed by a reserve of real world assets, including bank deposits and short term government securities, and held by a network of custodians. Its structure is intended to foster trust and stabilize price. Like other cryptocurrencies, Libra transactions will be powered and recorded by a blockchain, which is a shared ledger of transactions maintained by a network of computers. The advantage of a central bank issued digital coin had over those issued by WeChat and Alipay was that commercial platforms could, in theory, go bankrupt, which could cause users losses. Its ability to be used without an internet connection would also allow transactions to continue in situations in which communications have broken down, such as earthquakes. So the technology is very much so ramping up, has ramped up, and it's here today. It's just a matter of time. The trapdoor Max Kaiser was talking about, I don't think we can discredit it. There is a door that is going to be open that we are going to see these changes walk on through. So, again, whatever it is, we are going to be switching over from a current monetary system to a new monetary system. And again, that's where you need your gold and silver. We talk about this all the time. The key point, I believe anyway, the key point is not necessarily the aftermath or how things will look after, because what matters more is what is before that, which is the transition. We got to go from here to there, and it's that transition. That's the part that is either going to put you in a better position in the aftermath or not a better position in the aftermath. So transition is key, and we know to get from where we are today to where we're going to go tomorrow, there needs to be that transition. And during that transition, you want to have a store of value. You're going to need something that's going to hold the value of your fiat. You need something. Okay, looking at comments, a few more comments, and then I have to be heading out in a bit. Got to get my wife's gift still. Haven't got her a gift yet. So I won't say what it is just in case she's watching. Anyway, let's see. Did people hear about debt prisons open Jeff Sessions crap? Weme, I tell you what, I did come across that. I was considering having that as a topic to talk about those debt prisons. They seem to be coming back. Debt prisons, they have a history, where if you didn't pay your debt, you go to jail for a while, and I've seen photos of the ones in the UK where they were really small, really cramped, and I've read articles where they are considering bringing those debt prisons back, and can't imagine what it would be like, especially with the U.S. Hey, maybe that's what those FEMA camps are for. Who knows, right? Don't want to get too tinfoil hattish on you guys. American Rebel. Oh, thank you, my friend. Appreciate it. Appreciate it. Merry Christmas to you as well, and to everyone out there. Really do appreciate it. Uh, let's see. Yeah, Jason Beck, I watch each week, but mainly, oh, where'd it go? Just lurk and don't comment. Just wanted to say happy holidays to everyone. Jason, thank you for wishing all of us happy holidays. We appreciate it. Um, I know a lot of times you can't help gloom and doom. That's just what the news seems to be offering us nowadays. But look around. We have family, we have friends, maybe even a job that we like. We have things that we are blessed with. We're blessed with each other, and I think it's a good idea if we all take in the concept of let's be a blessing to others as opposed to being a burden. But there is a lot of negative news out there. Doesn't mean we have to fall into being negative people or always having a negative outlook. Why we say what we say, it's some people take it as being negative, but the truth is it's more about, it is positive in a way that there are things you can do. We want you to be able to look at things, be able to help yourself, be able to help your family. There are things you can do. You don't have to let all these negative things around you pull you down. There are things you can do. And those are the things we're trying to point out. And a lot of people through your comments, there are like-minded people. There are people who give us different opinions. There are people who oppose what we say, and it's all good. We need to see all sides of the argument. And so again, especially around this time of the year, Christmas, let's just count our blessings. We all have them. We may have personal things going on as well, health issues, financial issues, family issues, whatever it might be. But take the time to step back and look around, and there are things to be thankful for. I'm thankful for all of you, and all of you are definitely a gift for me and a gift for all of us at SBTV. We enjoy doing this, and again, we just want people to know that there is a lot of positivity out there, and we're not trying to bring gloom and doom every day. It's just understand what's going on and understand there are things we can do to help ourselves. Mike the Finder, thank you, buddy. Appreciate it. Thank all of you. Really do appreciate it. Christmas is coming up. Understand the reason why there is a Christmas. It's not only about presents under the tree. It's more than that. It's a lot more than that. Take the time to self-reflect. Always take a look at that person in the mirror, and try to make that person a better person. And before anyone else, before we point the finger at anyone else, let's always take a look at us. What can we do better? What could we have done different? And if we do those things, I think we'll definitely be a gift to most people we come across. So with that, I want to wish you all a Merry Christmas. Happy New Year coming up. And I wish everyone peace, love, joy, happiness, and blessings during this time of the year. And as always, saddle up for what's coming ahead and silver up. I'll see you guys next week. Take care.